A very good morning, friends. So I hope you're all doing well. So today we're going to start with another interesting standard, and this is a disclosure standard again. But unlike India's 24, which we did yesterday, that was a purely disclosure standard and had no computations. But this particular standard, India's 108, has got certain computations, but very slight basic mathematical calculations indeed. Largely, of course, the standard is a disclosure related standard. So our discussion on this is going to be more with reference to the disclosure aspects. Now, first of all, I think I need to tell you what is the name of the standard. Indus 108 is called operating segments. There was a standard in IGAP as well, accounting standard 17, and that was called reportable segments. Now, you must be wondering, first of all, that accounting standard 17, you used to call it as reportable segments, and here the standard is called an operating segments. Well, I think, first of all, whether you've got a background on operating reportable segments in terms of AS17 or not, it doesn't make a difference. Well, if you don't know anything, that's better. Because even if you know it, the emphasis is, of course, going to undergo a change. Now, let me first make a little background in terms of why are we talking in terms of this index? Why are we talking in terms of operating segments, that is Index 108? So let's, I think, first of all, understand the need of this standard. So I think the first thing which we need to appreciate in this particular case is the need of Ind AS 108. So that once we study this particular standard, we are able to first of all appreciate what is the need of this particular standard. Companies these days are into diversified kind of businesses. Let's say, for example, a particular entity is operating into, let's say, FMCG sector. At the same time, it has also got a business in the electronics sector. At the same time, it may also be operating, let's say, in the clothing sector. So they are into diversified kind of businesses. Everybody wants to play safe and they get a portfolio in terms of various kind of industries they enter into. So that means if the company is entered into a diversified businesses, if they've entered into diversified businesses, now the main problem is that when the company makes its financial statements and the focus mainly is on the income statement, that is on the profit and loss account, you are going to make a single income statement. Your income statement is not going to make a reflection of the amount of revenue or the amount of profits you're earning from each and every kind of business. The income statement is going to give you a consolidated figure. The revenue and the profit figures is all going to be a consolidated figure. So when a company is in a diversified businesses and they would make a profit and loss account, it would give you a single figure information, whether it's a revenue or whether it's a profit. Now, the problem is that an entity would also like to internally, and even the stakeholders would like to get externally an information about the company. Every stakeholder of the company and even the internal management of the company would like to get information that if they're into three kind of businesses, then what is the profits and revenue coming from each line of operations? And therefore, the need of the standard comes in. The standard lays down that if a company is operating under various segments, so when I say that you're operating under various segments, the company might be operating under various, you can say, product segments, or they may be operating under various geographical segments. It's not necessary that you are a multi-product company, but it may be possible that you're selling a single product, but you're selling it at multi-locations. So the company might be either selling, you can say, multi-products. They may be selling multi-products, or the company might be selling into multi-locations, or maybe perhaps both. Or maybe perhaps both, that you're selling multi-products and you're selling at multi-locations as well. So this particular standard tells us that a company would have to make a reporting. You'll have to make reports, and that would identify that what is the amount of revenues, the profits, and certain other information which is coming from the various segments. That means it could be product segments or it could be, let's say, geographical locations. Now, one thing I'd like to caution at this particular stage, and that is, if you look at Accounting Standard 17, that is IGAP, it used to tell us something about primary formats and about secondary formats, wherein we used to say that if a company, let's say, considers the product as a main thing, we're going to report in a primary format about products and in the secondary formats about the locations. But there is no concept of primary and secondary formats which was given in AS 17. The management has to consciously make a choice that what is their focus point. So another very important agenda in terms of Ind AS 108 is that we need to see what is the perception of the management. Our operating segments, or I would say our reportable segments reports, is going to be completely management driven. You're going to see very soon as we get into details of this particular standard, you're going to see that there is a lot of emphasis on the management thought process. I would not be wrong in saying something at this end that this standard lays an emphasis that your reportable segments reports is going to be a replica of the thought process of the management. If the management considers the locations to be profit center, I'm going to report location wise. If the management considers that the products are supposed to be a profit center to them, they're more concerned with the products, then my reportable segments will make a report considering the emphasis on the product. So one very important input which you need to consider is that this Ind AS 108 is supposed to be a management driven standard. We need to consider what is the thought process of the management. Because whatever is the thought process of the management, our reports would be a reflection of their thought process. Okay, let me also give you another inputs as well. Though I think we've understood the need of the standard, that a company into diversified products, a company into diversified locations fails to get the information from an income statement, because income statement gives you a total information about the revenues and the profits, and it doesn't give you a segregated information. So therefore, the need of the standard was felt. The management wanted information, the stakeholders also wanted information. Now, I'll tell you something very interesting as far as the standard on segmental reporting or operating segments is concerned. I'm looking at way back when Accounting Standard 17 in IGAP was introduced. At that time, a lot of companies, of course, it was a mandatory standard to listed companies at that time. And one of the companies, ITC Limited, when it made it reportable segments, because they were into diversified kind of businesses, and they found to the surprise after making a reportable segment that a major chunk of the revenue and a major chunk of the profits was coming out of these cigarette businesses. The management was quite, shaken with the results that, they were into different kinds of multiple businesses, but major part of the revenue, I don't remember the exact percentage, but I think it was more than almost like 70-75%. 70-75% of the revenue was coming out of the business of cigarette, which is not really a good kind of business, I would say. So the management thought that, they need to take some conscious kind of steps and diversify into other product lines as well. You cannot survive on a particular business where you are getting a huge amount of revenue from a particular source of income, which is not a very good source of income. You're earning in the health of the people. So thereafter, the management took a conscious step after getting the reportable segments, and they diversified into a various kind of businesses. Today, when you look at ITC Limited, for example, you look at their into various kind of business, clothing businesses, FMCG sector, the stationery businesses, the hoteliering businesses, apart from the cigarette businesses. And trust me, if you look at the reports in the recent past now, you'll see the percentage of revenue coming from the cigarette business has substantially gone down. I don't remember the exact percentages, but it's almost come down to almost like, I think, around 40-45%. So it was a sharp downward trend from a 75% of revenue coming from X business, and then it turns down to around 45% of the business coming from that. So it's a very crucial standard. because even the management internally, and as I said, all the external stakeholders are very keenly interested in finding out the profits, the revenues you're getting from each and every segment. But is each segment worth of reporting? If my businesses is into, let's say, 15 kinds of products, am I supposed to make a reporting for all the 15 products? Of course not. Materiality is also going to play a vital role in terms of making a selection of what to report and what not to report. So, of course, materiality test has also been inbuilt into the standard, and we're going to very soon see what kind of materiality test has been laid down. So I think I've just made a very basic background on the need of the standard, because before we start over the standard, it is very important to understand why are we studying this particular standard? Why did the standard setters create this particular standard? Okay, so let's begin the journey on this basis now. And good morning to all of you, friends. Good morning once again. So now let's start the journey. And as you've already known me now, I'm always keen in terms of developing a step-by-step approach in terms of understanding a particular standard. So this standard could not be an exception. So what I've done for the ease of understanding, it's not given in the standard. For the ease of understanding, I've segregated the standard into a 4-step model. So let me, I think, first of all, begin the journey. For the ease of convenience, I have segregated the standard into a 4-step model. This is something which I have done. It's not a part of the standard. So later you might say that it's not a 4-step model. It's not. It is only for the ease of understanding. Now, what is this 4-step model? In the step number one, what we're going to do, we are going to identify what we technically call a CODM. So in the step number one, we're going to identify what we call a CODM. Now, what is a CODM? It is called the Chief Operating Decision Maker. So when we say CODM, the full form of CODM is the Chief Operating Decision Maker. It is called the Chief Operating Decision Maker. Now, you would also say that is a CODM supposed to be a CEO of the company? Is it the CFO of the company? Is it the COO of the company? Well, generally, yes, but let me caution you, friends, at this stage. I'll give you some more notes later, but let me caution you that in this particular case, when we are identifying a CODM, we're not looking at a person with a designation. Mind the words carefully. We're not looking at a person with a designation. You cannot necessarily say that a CEO or a COO or a CFO of the company is a chief operating decision maker. You need to see the function, what is the person doing? And the CODM not necessarily is got to be an individual. It can be a group of persons as well. We need to identify who are those main people who are entrusted with the task of allocating the resources to the particular divisions. Who are these particular people who decide that what resource is to be allocated to various segments in the entity? Who are these people who review the performance of these segments as well? As I said a little while back, the focus in terms of the standard is to identify the management thought process. So I want to understand who are these people, because I need to basically understand as an auditor the thought processes of these people. Because a management would always make a review of things which they seem to be important. A management would always try to dig and get internal reports based on, those particular segments where the focus is a profit center. So in order to identify what do we report in terms of operating segments, you need to first of all identify those people, because we need to understand the thought processes of those people. Unlike in terms of IGAP A17, these kind of things were not there. We never used to get into the process of identifying a CODM. So since, as we said, I'm overemphasizing this part, since, as we said, that it's a management-driven standard, we need to understand the thought process of the management. So in order to understand the thought process of the management, we need to identify that person or the group of person who is responsible, who decides the allocation of resources, who makes evaluations of the operating results of the segments. I need to understand who are these people, kahan se aate hain ye log. So we need to understand who these people are because we need to understand the thought processes. So identifying a CODM is not based on the title of the person, not a designation post, but it is based on what they do. The function is the deciding factor. No worry, we'll be taking some notes and just giving you an overview of the steps so far. Then in terms of the step number 2, what we need to do, we need to identify what I call OS. OS, as the name of the standard is considered to be an operating segment. And this para number 5 gives you a total of 3 conditions, which we'll see later, that there are a total of 3 conditions on the basis of which we will conclude that yes, this is an operating segment. So you need to fulfill all the 3 conditions in terms of para 5 to classify that yes, this is supposed to be an operating segment. Then comes the step number 3. The step number 3 is to identify the RS, that's what we call the reportable segments. So out of these operating segments itself, we would identify that what are the reportable segments. So we're going to see that which operating segment becomes a reportable segments, and there are a couple of information which is given in the standard. And I'm not giving you the para number, but it almost starts from the para number 12, and there are a couple of paras which deals with this. So we're going to spend a good time in terms of step number 3 because there is a lot of critical things which are there in terms of step 3. Because we are not going to report the operating segments actually. We're going to identify that out of this operating segment, which meets a threshold limit, and that's going to be called as a reportable segments. And then finally, in terms of step number 4, since it is a disclosure standard, you need to give the appropriate disclosures as well. So this is a 4-step model in terms of how Ind AS 108 has been built. So the first step is to identify the chief operating decision maker, the person who is the decision maker. We need to see what is his thought process. So in order to understand his thought process, you first identify that man. You identify the group of people who are the basic, you can say, decision makers of the company. Second, we look at the operating segments. Third, we look at the reportable segments. And finally, once you've identified the reportable segments, you need to make appropriate disclosures under the standard. So this is my 4-step model in terms of Ind AS 108. I think so far so good, nothing technical indeed. I think you must have pretty well understood. Let me still see if there are any questions still coming in between or not. Okay, I think Namrata, you got a question. Why do we need to identify the CODM? I think I have already answered that question, and I think I'll still give you the emphasis on that. You see, since my report is a reflection, now mind the words very carefully. I'm choosing the words, very carefully. Since my report is going to be a reflection of the thought process of the management, look at the wordings very carefully. My reportable segment is got to be you can say a reflection of the thought process of the management. So if I want to reflect the management thought process, I need to understand what is the management thought. And to understand the management thought, I need to identify who is taking the decision. So once I know that these are the people who take the decisions, I understand the thought process. What is their thrust on? Do they look at the product segments as of importance? Do they look at the geographical segments of importance? What is their considerations in terms of profit center? What is their perception towards the business? Let me, I think, also say something. Is it possible that there are 2 entities and they are into multi-products and multi-locations, but one management focuses on products and the other management focuses on locations? Is that a possibility? Yes, it is. The management perception could differ. So one of the management feels that I'm more concerned with the profits coming out of each product, irrespective of the location where I sell. Another management has got a perception that are more concerned with the amount of profits coming from the locations, irrespective of the volume of products I sell at each location. So accordingly, in the first case and in the second case, you will make two different kinds of reportable segments. Because the perception of the management focuses on products. So my report on a reportable segment is going to focus on products. If the focus of the management falls upon, you can say, the locations, my reportable segments is going to focus on reporting on location. So these people are the people who take decisions, and their thought processes reflects a management thought process, and my report is going to be driven by their thought process. So we need to identify these people. That is the step number one. I guess I've been able to answer your question on that. And Shriram, you said, so can we use this four-step model in the exams as well? Well, typically, you may not have to actually state this four-step model in the exam, for the reason because you're going to get independent questions. Maybe you get a question just on the operating segments, or maybe you're going to get a question on the reportable segment. But in any case, let me tell you that as far as the reportable segment is concerned, here also I'm going to give you a three-step model which I have created. You can definitely quote that in the exam. Because when you're creating a three-step model, it is just a sequence in which we are moving. So of course you can do that. But do give a clarification that this is not a step-by-step approach given in the standard. It is just you're trying to illustrate the answer. So a small note would be of good help. Okay. Right, friends. So the background is laid down. Now I think let's start with step by step. So we will focus now on the step number one. So let's begin the journey in terms of the step number one. So in step number one, you're not going to get any question because identifying the CODM doesn't involve any mathematical calculations indeed. But I think there are a few things which, of course, I need to highlight, and I think I'm going to document them as well. So when I said COD anything, so I think we can first make a mention with regard to that a CODM can be an individual. It can be an individual or a group of persons. So it can be an individual or it can be a group of persons as well. The second most important thing which I said, that when you're looking at a CODM, you're not looking at the title, you're not looking at the designation of the person, you're looking at the function. So we are not looking at the title. We are not looking at the title or the designation. So we're not looking at the title or designation. So we're not looking at the title or designation of these people or the group of persons, but we are looking at function, what they do. So the focus is in terms of the function, what are these people engaged in? So what is the function we're looking at is, there are two functions. As far as a chief operating decision maker is concerned, he is supposed to be engaged, you can say, in terms of two functions. One is he decides the allocation of resources. One is he decides the allocation of resources, that what is the resources to be allocated to the operating segments. So we need to see who is the person who decides the allocation of resources to the operating segments, and putting it as OS. And along with this, he's got another second function as well. He makes a review of the performance. He makes the review of the performance of operating segments. So he's got two, you can say, objectives. One is he decides the allocation, and one is he makes a review of the performance of the operating segment. So in an entity, when you are going to apply this particular standard Ind-AS 108, you're going to first of all see, okay, let me identify those people. Let me identify that individual or the group of people who are supposed to be engaged in the function, and two kinds of function. One is they decide how much resources of the company is going to be allocated to these operating segments. He makes a review of the, you can say, performance. And when I say he makes a review of the performance, he's basically making a review of the operating results of these particular segments. Okay, so we said this, and of course, one more inputs we can say, even after understood that it's the title is not relevant, but it is the function, but we can still say that generally, when you're looking at a CODM, we can say the CEO or maybe the CFO or the COO, the Chief Operating Officer. CEO is the Chief Executive Officer, and COO is the Chief Operating Officer, and CFO is the Chief Financial Officer. So these people, we can say generally, these people are CODM. But as I still said, that you cannot go with the title or designation of these people. Designation is not the criteria to decide the CODM. It is the function which is important and not the title. But still, having said that, we can still say that generally people with these kind of designations would be interested in the two functions and they would be considered a CODM. I think that's it. On step number one, I don't think so. We need to know anything further on this. So step number one, I think is pretty much clear. As we're going to go with this particular standard, you're going to find it quite easy to begin with. There will be certain complications coming in terms of step number three, but trust me, I'm going to make you a champion in terms of step number three, but then terms and conditions apply. Okay, so step one is done. Now let's go to the step number two with you. Now, as far as step number two is concerned, it is identifying the operating segments. And as I said, in this case, we are focusing on the para number 5. So what I've done, I've taken an extract of the para number 5 to give you some insights on the operating segments. So we're going to go to the step number 2. So let's have a look at the concept of an operating segments, which is given in the para number 5. This is interesting. So I'm just going to take the language to make it very clear. Now watch the analysis very carefully on the concept of an operating segment. In fact, there is an education material which has been issued by the Institute on Ind AS 108, and some very interesting clarifications are given. In the course of my discussion on this standard, I'm also going to throw a light on certain clarifications which are given in the education material, because you need not go through the education material for the examination point of view, but a few clarifications broadens the thought process as well. So some places or the other, wherever I feel that this is important, I'm just going to give you the inputs, what the clarifications are given in the education material. Okay, let's begin with the operating segments. It says an operating segment is a component of an entity. The focus is on the word that it's a component of an entity. Now, when I say it's a component of an entity, it can be a product segment, what we call a business segment. It can also be a geographical segment as well. So when you're looking at a component of the entity, we can say it could be a business segment, that means a particular product line, or it could be a geographical segment. So the component could be either business, a product segment, or it could be a geographical segment. Then it says an operating segment is a component of the entity, and we're given ABC. You need to meet all three conditions. You need to meet all three conditions. Even if one of the conditions fails, you cannot classify it as an operating segment. So we need to meet all the three conditions, A plus B plus C. Let's have a look at each of these conditions. It says a component that engages in business activities from which it may earn revenues and incurs expenses. And incurs expenses are not really the brackets. Now, there is a very interesting word which is used in the condition number A, that the operating segments may earn revenue. I don't think so. I need to emphasize that when I use the word may, it indicates an option. It indicates that it may earn revenue. So earning a revenue is not important. When you go to classify a particular, you can say component as an operating segment, it is not necessary that it is earning a revenue. But what is more important is that the expenses are getting incurred. So, like for example, if you've got a particular department where there is no earning in terms of revenue, it doesn't make a difference. But there is an incurrence of expense that is important. So if it is earning a revenue and incurring an expense, okay. If it is not earning a revenue but is incurring an expense, then also it is okay. Then there is a second condition. It says whose operating results are regularly reviewed. It says whose operating results are regularly reviewed by the entity's chief operating decision maker to make decisions about resources to be allocated segment, and it assesses the performance as well. Now, there is some very interesting terminology again used. And there have been some clarifications which are given in the education material. Like, for example, the word may was interpreted in the education material, where they clarified that earning of revenue is not necessary. Now, similarly, if you notice on the clause number B, it says whose operating results. The operating results basically means that we're looking at the profits. A very interesting question was put across in the education material where they said that a CODM reviews only a revenue of a particular component. Does it meet the condition of a B or not? Well, you cannot outrightly say a no. Let me caution you, you cannot outrightly say a no. Because when the question was put across that a CODM is making a regular review in terms of only a revenue of a particular component, does it meet the condition of a B? It would be an answer subjective in nature. Now, there are two kinds of situations. Number one, the component which you're talking of is barely got any kind of expenses. It doesn't have much expenses. So that means even if the CODM makes a review of only the revenues of such a segment, we would say the condition number B is met. Don't worry, the notes will come later. But if you're considering that a particular component has got a huge amount of expenses as well, and then if the CODM only makes a review of the revenue, then this clause is not met. So I can say that if we are given in a question that a CODM makes a review of only the revenues, considering that the expenses of that component is negligible in nature, do we meet the condition of a B? I would say yes. But if the CODM makes a review of the revenue, considering that the expenses are not negligible in nature, would it meet the condition of a B? Then the answer is no. So the wording used is he makes operating results are regularly reviewed by the CODM so that he can take the two functions allocations and he could assess the performance as well. And then there is a third condition which says for which discrete financial information is available. Now, what is a discrete financial information? Nothing is defined in the standard. But the education material in Indus 108 says that when you say discrete financial information, the word discrete indicates separate financial information. The word discrete means that a separate financial information is available. Can you give me what is the revenues, what are the expenses, or what are the assets and what are the liabilities, which relates to this particular component? So because if I am wanting to make it as a reportable segment, one of the most important elements is I need a separate information as well. So if that particular component of the entity, you have the information, a separate information on the income, expense, assets, and liability, we can say the third parameter is met. So in a nutshell, when you're looking at the step number 2, there is the operating segments. The entity has to first of all get a 3 checklist with them. They need to first of all identify number 1. You need to see that is that component earning a revenue? Not necessary, but it is incurring an expense that is necessary. So you're going to get the checklist number 1, that is it earning a revenue? If yes or no, not an issue, but is it incurring an expense? Yes. Number 2. Is the CODM making a regular review of the operating results? He's making a review of the profits? Good. He's making a review of the revenue when there are negligible expenses? Good. He is making a review of the revenue, but there are expenses not negligible. No. And then the third parameter is that you've got discrete financial information available for that component. You're able to get a separate information for the assets, liability, incomes, and expense. So once the three conditions are met, it becomes an operating segment. There are some illustrations given in the study material on the concept of an operating segment. We'll come to that, but let's first make some notes to you. I think so far so easy. I don't think so. This must be, triggering your mind too much with many questions indeed. Okay, yes, that's right, Namrata. May is undoubtedly optional in nature. Good morning, Viraj. Okay, so let's take it further. Let's, I think, document some notes on the step number 2. So let me just go to the step number 2 and give you some notes to begin with. So we're looking at the step number 2, and this is identifying the operating segments. This is OS, that is identifying the operating segments. I'll document the notes, all the permutation combinations which I gave you, along with the clarifications of the education material as well. So we can say in terms of operating segments, we need to meet all three conditions. We need to meet all three conditions. So unless you meet all three conditions, you can't call it as an operating segment. So we have got condition number 1, and we have got condition number 2, and we've got a condition number 3. It's a pretty easy standard, trust me. By the end of the session today itself, you'll be comfortable in terms of the standard. It will take you barely around 10-15 minutes to revise the entire standard. Now, in terms of condition number 1, what is important is that the component may earn revenue. Let's circle the word may earn revenue. So whether it is earning a revenue or not, it doesn't make a difference. So the component may earn revenue, but expenses are definitely incurred. So it may earn a revenue or not, that's not important, but the expenses are definitely incurred. So let me underline definitely incurred. So expense is being incurred is important, earning a revenue is not important. Then the condition number 2. The condition number 2 is that the CODM makes a regular review. It makes a regular review. So the CODM makes a regular review of operating results. He makes a regular review of the operating results. Let's make a box on the operating results and give us some clarifications on the concept of operating results. Now, when I'm looking in terms of the operating results, the word operating result means profits. So it means profits, but let's give a clarification at this end as well. So we can say that if CODM makes review of only revenue, if CODM makes a review of only revenue, so if he makes a review of only revenue, then I would say there are two situations. The expenses are negligible. The expenses are negligible, and we can say the expenses are not negligible. So the expenses are either negligible, or we are saying that the expenses are not negligible. So if the expenses are negligible, it satisfies the condition. It satisfies condition 2. And if the expenses are not negligible, it fails condition 2. It fails the condition number 2 in that particular case. So we've got basically 3 situations coming out of the condition number 2, that if the CODM makes a regular review of the operating results profit, condition is met. If he makes a review of the revenue, then it depends upon whether the expenses are negligible, the condition is met. If the expenses are not negligible, then the condition in this case is not met. Okay. And then comes the condition number 3. And the condition number 3 is discrete financial information is available. So let's circle the word discrete, square on this. Discrete financial information is available. Discrete financial information is available. So we've got a discrete financial information available, then we can say yes. So what is a discrete financial information? Discrete means that we've got separate information. We've got separate info with regard to, I would say, revenues, XY, the reportable segments as well. Okay, so I guess if you're taking a note on this, we can maybe take you to the study material and have a look at one of the illustrations relating to the step number 2, that is on the operating segments. Okay. So far so good. I don't think so anything much technical. Okay, Shriram, I think you've got a question. So does it mean whether or not it earns revenue from a particular component, it has to incur any expense on that? Yes. For example, let's consider a company has got a research and development department. Now, as far as a research and development department is concerned, I don't think so it would be earning any kind of revenue, because it is totally engaged in R&D. But the management is very keenly looking at resource allocation to this particular department. The management is very keenly, evaluating the performance of this department as well, because in my organization, the R&D is a very important, you can say, division. So in this particular case, if you look at the operating segments in this case, I would say that in this particular case, it may earn revenue. I would say, no, it's not earning a revenue, but it is definitely incurring an expense. And even if you say that you're making a review of the operating results means a profit, which could be a negative profit or loss as well. So in this particular case, you'll meet the condition 1 for that R&D department. You'll meet the condition number 2, and discrete information is available. Yes. If the management has got a focus very clear that for me in my organization, the research and development department is a very vital information. So that is one of the cases where revenues are not earned. But discrete information is available, expenses are getting incurred, and the CODM is making a regular review in terms of the losses this department is earning. So it would meet the definition of the operating segment as well, right? I guess that answers your question. Okay. Right, so this is on the step number 2. Now let's take you, friends, on the education, on the study material. I've also loaded the study material as well. And let's have a look at an illustration which is given on the operating segment. So let's, I think, have a look at the illustration number 1. So we're going to first of all look at the illustration number 1 with you, and then we'll take it further. So let's go to the illustration number 1. So this is on page number 11.89. Illustration 1 on page 11.89 of the study material. Let's, I think, have a read of this illustration. So we are given the facts in the question. It says ABC Limited manufactures and sells healthcare products and food and grocery products. So they are selling healthcare products and they're selling food and grocery products. It seems that they are into multi-products and there are 2 product lines. Now we need to see whether they're operating segments or not. It says 3 products ABC are manufactured. So we are manufacturing 3 products ABC. Product A is classified as a healthcare product. Product E is classified as a healthcare product. And product B and C are classified as food and grocery products. So we can say they're manufacturing 3 products, out of which A is supposed to be healthcare and B and C is supposed to be food and grocery. It says product B and C are similar products. and discrete financial information is available for each manufacturing locations and for the selling activities of each product as well. So you've got a discrete financial information available, locations, and for the each product line. There are two line managers responsible for manufacturing activities of the product A, B, and C. So you've got two line managers who are responsible in terms of these product line. Manager X manages A and manager B manages B and C. Then he says the operating results, the word is very clear, the operating results of the healthcare products A and food and grocery products B and C are regularly reviewed by the CODM. Identify the reportable segments of ABC. The word used is reportable segments, but I would say we're typically looking at, in this particular case, an operating segments, because once the operating segments would meet certain thresholds, it is only then we're going to call it as a reportable segments. Now let's, I think, have a look in terms of the three factors. So let's have a look at the analysis, what is given in out here. So in this particular case, let's see what is the inputs given in the solution. So we are given the insights out here. In this situation, both the healthcare and the food and grocery product line meets the criteria for operating segments which we have done. Let's ask ourselves the three questions. Number one, in this particular case, is discrete financial information available? Yes. Is the CODM making a regular review of the operating results? Yes, very clearly given. And number three, are they earning revenue? Now, at the first instance, when you say that the CODM is making a review of the operating results, I think it is very much clear that the earning revenues and expenses are getting incurred as well. And all the information is available, location and product wise. So I think all three parameters are very clearly present, that you can say they're earning revenue and incurring expense. Discrete information is available. And in this particular case, a regular review is being done, operating results is being done with the CODM. So it's a clear-cut case of all three parameters met. Therefore, it is likely that ABC's operating segments would be classified as healthcare and food and grocery segments. As I said, the requirement of the question is asking us that it's a reportable segment, but technically speaking, if you ask me, it should be an operating segment, because once an operating segments would meet the threshold limits which are given in step number 3, then it becomes a reportable segment. So basically the answer, of course, says that they are operating segments in nature. I think pretty simple and pretty straight indeed. Okay. So that was the illustration number 1. I think we can also have a look at the illustration number 2 as well before we go to the step number 3. So let's have a look at another one. Now, this is slightly subjective in nature. Page number 11.91, we're looking at illustration number 2. This is slightly subjective in nature. What I remember, slightly subjective in nature. Okay, let's have a look out here. And I think number 3 you said, sir, if expenses is incurred in total, then we need to allocate that. Well, yes, but what we are saying is that you are able to give us a separate information. If you are saying that a particular component is operating segment, we need to get separate information. So whether by way of a appropriate allocation technique or whether by way of separately identifiable, but what is important is discrete information needs to be available. Correct. Okay, now let's go to the illustration number 2 and let's have a read. It says the CEO along with the board members do a review of a financial information about various business segments, and they take decisions on the basis of discrete information available for these segments and are correctly identified as the CODM. Now, he's very clearly made a mention that the CEO along with the board members. So as I said, a CODM is not necessarily an individual. It can be a group of person as well. So the CEO plus the board members is being collectively called as CODM. They're making a review of the financial information, and on that basis, they take decisions and of these particular segments. It says review of only revenue information is done. This is, based on the clarification which I gave you in the education material, that a review of only revenue has been done. So review of only revenue information is done for decision making about these segments. As per the CODM, many segments require a minimum cost due to centralization of cost. Where the review of only the revenue information is sufficient for these segments to be considered as operating segments for the purposes of Ind AS 108. I think you know the answer already. Let's, read this. Many entities would be considering the decision making for segments on the basis of revenue, especially the ones aggressively trying to build a market share. Common examples would be businesses into technology sector or those creating and launching new products from time to time. The focus of the management is always been on terms of what you call the top line. What we call in a practical life is a top line. That's nothing but revenue. Because in the income statement, what is on the top line is supposed to be revenue. So the focus of the management is in terms of revenue, because you're in the technology sector, you're not worried on the expenses, but you're worried on the revenue growth. When you're launching products from time to time, for them, decision making for different regional segments would need a revenue growth and related information for further investment decision. The logic given by the CODM is that since many segments require a minimum cost due to centralization, therefore, revenue only data is a fair representation of the operating results. In the above case, review of the information is based on only the revenue data. It may be appropriate. So look at the language, very safe. It may be appropriate to consider that the segment meets the definition of operating segments. So I think you can give definitely this particular emphasis that in this particular case, the expenses incurred in the segment is not too much. It is a minimum expense, and therefore you can say, you can even make a mention that as per the clarification which is given in the education material, it very clearly says that a review of revenue data when the expenses are negligible or minimal in nature would meet the second condition. So if the other conditions are met, it definitely becomes a reportable segment, operating segment to that extent. Okay, so that was very simple and straight indeed. So these two illustrations are done. Now I think we need to get on to another one. This is now another illustration. I think this was subjective because I thought one of the illustrations slightly subjective. So let's go to the illustration number 3. So since it's a smaller standard, we're able to cover up more questions as well with you. So let's have a look at the illustration number 3 in the study mat now. And this is again based on the operating segments itself. So that wonderful chart has been made, which I've already given you as a 3-step model, and that's the chart which you can see in the study map. So let's have a look at the illustration 3. It says X Limited is engaged in the manufacture and sale of 2 distinct type of products, A and B. It says X supplies the products in the domestic market in India. X supplies them in the domestic market in India as well as in Singapore. Now, let me tell you one thing first of all. If you remember, when I took the definition of an operating segment, I very clearly said that it is supposed to be a component of the entity, and that component could be a business segment, that is a product segment, or it could be a geographical segment as well. So here in this particular question is giving you that the company is engaged in multi-products and multi-locations both. So it needs to be seen what is the perception of the management. So they're dealing with 2 products, A and B, and they're selling in India as well as in Singapore. Now there are 2 regional managers responsible for manufacturing activities of A and B worldwide, and also 2 other managers responsible for geographical area. Now, can you see something very interesting, which is creating a subjectivity? The company has appointed 2 managers, regional managers, and they're responsible in terms of the products A and B worldwide. And they've also appointed 2 managers which are responsible for different geographical area. So two managers are focusing on the performance of the products. And two managers have been appointed and they're focusing on the revenues coming from geographical location. It seems the management is, keenly looking at the product performance and they're keenly looking at the geographical performance. So out of which one is going to become an operating segment? Are we going to consider the products? Are we going to consider the geographical area? Let's see. Then it says for internal reporting purposes, as I said, that is very important because my standard gives a very clear-cut focus that the management thought process is to be replicated in the form of the external reporting. Their internal reporting emphasis is going to become a part of the external reporting. If they emphasize the products, I would report the products. If they emphasize on the geographical locations, I'm going to report the geographical locations. For internal reporting purposes, X provides information product-wise as per the geographical locations of the company and as per the geographical location. Now, in this particular case, I think it becomes subjective because the internal focus of the management is both the products and the geographical locations. They're treating the products as a profit center. They're treating the geographical area as a profit center. They've appointed managers to make a review. And internal reporting, their emphasis is on products. The emphasis is on geographical area. Then he says the CODM regularly reviews the operating results of both the set of components. How should X Limited identify its operating segments? As I said, now this is going to be something, which you cannot give a clear-cut answer. So see how we're going to drop the answer. In this situation, both the geographical sales area and product area may meet the criteria for the operating segment. However, in such situations, it is more difficult to determine clearly which set of components should be identified as operating segments. In such a situation, the entity would do what? Let's read further. So it says in such a situation, the entity should determine which set of components constitutes the operating segments by reference to the core principle given in the standard. Now, what is the core principle which is given in the standard? The core principle is that entity should disclose information to enable users of its financial statements to evaluate the nature and financial effect of the business activity in which it engages and the economic environment in which it operates. The entity should also assess whether the identified operating system realistically represents the level at which the CODM is assessing the performance and allocating the resources. Again, the emphasis is on the core principle that what is the CODM looks at? What is his focus in life? Is he focusing on products? Then let me report product-wise. If he's focusing on geographical area, let me report geographical-wise. Therefore, it should consider all the factors and apply judgment. As I said, it is subjective. So he needs to apply a judgment to determine which component will be taken as an operating segment. Well, generally, this kind of question doesn't come in the exam, but this is to give you a clear understanding of the concept. The basic idea in terms of this illustration is to focus on the core principle that, we wanted to overemphasize this particular point that the management perception is the guidance factor. Where a company chooses an operating segment, so if it is just a multi-product with single location, undoubtedly product segments. If a company is multi-geographical locations with a single product line, of course, geographical. But if they are into two line of businesses, multi-products and multi-geographical locations, I need to see the management perception. If the management perception is very clear, I would easily identify that if the internal reporting focuses on products, then product segments. If they focus on geographical, then geographical segments. But sometimes it can be a matter of huge judgment, because the focus internally might be on both the factors. So we need to see ultimately, what is the management objective? Maybe we find out, yes, internally reports are being generated product-wise and geographical-wise, but still there would be some kind of emphasis. So what is that emphasis? Is that products or is that a geographical area? And accordingly, the operating segments will be chosen. Great. So that was a little subjective illustration involving a judgment. Right. So this is done. And I guess we can leave the illustration for you. Now let's go to the next area of discussion with you. And this is now the step number 3. Okay, so far so good. Let me just, I think, quickly consolidate the inputs to you before we take the journey, and let me see if there are any questions coming so far in between. Let's have a look. Okay, I think there's nothing so far. So pretty simple standard, so will not raise many queries as well. So let us, I think, consolidate the picture before we go to the third and the most interesting, crucial step in the standard. We started off with the standard, first of all, understanding the need of the standard. That when you look at the income statement of a company, it always gives you a consolidated information on the revenues and on the profits. A company which is operating in a multi-locations or having multi-products will not be able to get separate informations on product-wise or on geographical-wise. And not only the management needs that information for internal assessment, but even the external stakeholders would need that kind of information. Therefore, the need of the standard came. And I emphasize one thing, and I think you would now very well agree with me, that the focus is on the manager. My idea of making a reportable segment, a segmental reporting, is that whatever is the internal thought process of the management, my report is a replica of their thought processes. Their focus is on the products, so I will give a report to the external report in terms of products. Their focus is in terms of geographical locations. I'll give a report to the external stakeholders on the basis of geographical area. So their thought processes internally is got to be replicated in the form of an external reportable segments. So we created a 4-step model for this particular purpose for ease of understanding. And we said the step number 1 is identifying the CODM. And I think I cannot further overemphasize that why I'm looking at a CODM. Because I need to understand the person's thought process. I need to understand the group of people or the individual. What do they think? What is their perception of a profit center? That if a company is engaged in multi-locations and multi-products, what do they evaluate? Are they happy with the performance that the products are doing well, irrespective of the location? Are they happy with the fact that they are doing well in terms of locations, irrespective of the product they sell? Then accordingly, once I understand their thought process, their internal assessment becomes a base to make reports. Therefore, the CODM needs to be identified. Then we said, after the step number 1, you go to the step number 2 and get the operating segments. The operating segments are a components of an entity, maybe product segments, maybe geographical segments, which needs to meet all 3 conditions. Number 1, you need to first of all see that the component may be earning a revenue, but what is important is that the expenses are getting incurred. Number 2, the CODM makes an annual review makes a regular review in terms of operating results, ideally profit. But it doesn't preclude a review of revenue, especially when the costs are negligible in nature. And then discrete financial information is available. So you meet all 3 conditions, it becomes an operating segment. Okay, now let's come to the step number 3, which is now going to take some time. Now, as I proceed with step number 3, I am going to do my discussion in 2 phases. First, I'll give you the simple part of the standard. And then I'm going to give you the complex part of the standard. So I'm going to give you a 3-step model, and I'm going to create some sub-steps within each step as well. So this is one of the, you can say, crucial, a slightly technical part of the standard. You will 100% understand what I'm saying, but I need your full attention. And let's begin the journey on step number 3. So first, we'll give you a very basic overview of identifying reportable segments. Let's have it. So I'm taking a little extract of the standards, and I am looking at the para number 13. I'm looking at the para number 13, or rather, okay, not 13. I think let's first take you to para number 11. So let's go to the para number 11 to begin with. So we're looking at the step number 3, that is reportable segments. So read this very carefully. I guess I just need to clear this out. So let me first clear this. Okay, so let's have a read on the para number 11, which is talking in terms of reportable segments. Let's read this carefully. I'm not going to read a few things as of now because, as I said, I'm just going to give you some basic framework and then introduce the complications. Now we're looking at the step number 3, that is identifying the reportable segments. An entity shall report. I don't think so. I need to emphasize the word shall. An entity shall report separately information about each operating segment that has been identified in accordance with para 5. I'm leaving the word or. I'm leaving the word or. It says you've identified the operating segments in step number 2. And it exceeds the quantitative thresholds which are given in para number 13. Well, in step number 3, when you're looking at a reportable segment, you need to basically apply certain quantitative threshold limits in order to decide that it is a reportable segment or not. So the step number 3 is got 3 substeps. Step number E. You need to apply a quantitative threshold limits to the operating segments identified in step number 2. Now, what are these quantitative threshold limits? Let's have a look at the limits in para number 13. Now, in terms of para number 13, we are given 3 kind of tests. And these tests are quite similar to what you might have done in Accounting Standard 17 in IGAAP. The test is basically, I would say, a test of materiality, where we're going to conduct a test which is called a revenue test. We're going to conduct a test which is called a profit or loss test, and we're going to conduct a test which is called an asset test. Not asset, not ACID, but asset, ASSET. So once you've identified the operating segments in step number 2, now it's time to apply some materiality test, which is called a quantitative threshold test in terms of these segments. Let's begin. It says an entity shall report separately information about an operating segment that meets any of the following quantitative thresholds. You need to meet either of the 3 tests which is given. Any one test met serves the purpose. Let's have a look at the test 1. It's reported revenue, including both sales to external customers and inter-segment sales. Now, you need to be very cautious on when you conduct a revenue test. Let's say, for example, a company identified, let's say, 5 operating segments A, B, C, D, E in step number 2. I think, let me take an example to illustrate this. It says the revenue, including external and inter-segment sale, is 10%. 10% is for materiality test, is 10% or more of the combined revenue, internal and external, of all operating segments. Let's take a very basic example to understand the revenue test. So let me just go back and let's give you a revenue test. So let's consider a very basic example to understand how the revenue test is being conducted. So let's say the company identified A, B, C, D, E. These are the 5 operating segments. In step number 2, we identified that the company has got, let's say, 5 operating segments. Now, we are given the sales of these segments and we are segregating the sales in terms of external sales and in terms of internal sales. These segments might have made sales to each other. That is the inter-segment sales. And they must have made sale to third-party outsiders, that is external sale. So let's take some arbitrary figures and let's take the figures in lakhs. So let's say the external sale is 100 and let's say this is 200 and let's say this is 50, let's say this is 150 and let's say this is 20. And let's consider the internal sales. Let's say the internal sales is to the extent of 80 the internal sale is 0. The internal sale is, let's say, to the extent of 30. And let's say this is 20. And let's consider this is again 20. So I've just taken some arbitrary figures for the external and the internal sale. Now let me also consider the total sales as well. So external plus internal, this is going to give us the total sales. This is 180, this is 200, this is 80, this is 170, and this is 40. And let's add up all of these and get the total as well. So this is 180 plus 200 plus 80 plus 170 plus 40. That makes it a total of 670. Now, what does the para number 13 tell me in the first revenue test? It says you do one thing. Take 10% of the combined revenue. This is the combined revenue, external and internal, of all the operating segments. So it says you do one thing, you take 10% of this, it is coming to 67. Any segment which has got a revenue 67 or more is reportable in nature. I repeat, you take the combined revenue of all the operating segments, take a 10% of that. Now, any segment which has got a revenue 67 or more is supposed to be a reportable segment. Let's see which one is meeting the criteria. This is 67 or more, this is 67 or more, this is also 67 or more, but this is not 67 or more. So we can say A, B, C, D are supposed to be reportable segments in this case. I am not worried whether the other two tests is met or not. You meet any one of the tests, it becomes a reportable segment. So technically speaking, I'm not supposed to apply the other two tests in terms of A, B, C, D. We're just going to evaluate E if it meets the other two tests or not, right? So what is the focus point? That in the revenue test, you need to take a combined revenue. Internal, external, combined. This is crucial because we're going to conduct some other tests later where we're going to consider only external revenue. So in terms of this test, what do? First of all, get the combined revenue. I'll give you the notes later. You get the combined revenue, internal, external. Take 10% of the combined revenue and see whichever segments external, internal revenue is 67 or more than 67 becomes a reportable segment. Pretty simple and pretty straight indeed. I guess I am absolutely clear on this. Okay. Let's go to the next one now. This is revenue test. Let's have a look at the second one now. Now, the second one is interesting because this is going to blend in terms of profit and loss combination. It says the absolute, the word is very clear, the absolute amount of reported profit or loss is 10% or more of the greater in absolute amount. It says you do one thing, you consider the profit or loss whichever is greater in absolute terms and consider 10% of that. The combined reported profits of all operating segments that did not report a loss, the combined reported loss of all the segments that reported a loss. Slightly confusing language. Let's take an example to illustrate this. Now, this is the profit or the loss test. Let's take an example to understand this as well. So let me take the example for this particular test. So we'll change the figures now. So let's consider we've got 5 operating segments, A, B, C, D, E. So in step number 2, you identified the operating segments that is A, B, C, D, E. Now, what do I need to do in this particular case? Let's say this is the profit, or let's say these are the losses. So losses are taken in the brackets. So let's take the figures, arbitrary figures in terms of lakhs. Let's say this is 100, and let's say this is 80. Let's say this is a loss of 200, and let's say this is a loss of 100. And let's say this is 20. So do one thing, make a list of the segments which have earned a profit separate. Make a list of the segments which have earned a losses separate. So segregate the profitable segments and segregate the loss segments. Now do one thing, Just add the profit figures. 100 plus 80 plus 20, that's 200. Add the loss figures without taking the brackets. Add the loss figures without taking the brackets. I've just added the profits, I've just added the losses, and I've ignored the brackets altogether. Now consider which is a higher figure in absolute terms, ignoring signs. Now you need to consider in this case that which is the higher figure in absolute terms. We need to consider the higher figure in absolute terms. So if I consider the higher figure in absolute terms, we can say the higher figure is supposed to be 300. So you need to take the profits on one hand, you need to take the losses on the other hand, ignoring signs. Don't consider the signs, get the profits as a whole, absolute data, get the losses as a whole, absolute data, and select the higher figure. Now what do you need to do in terms of the materiality test? You need to consider 10% of this. 10% of this is supposed to be 30. Any segment which has got a profit or any segment which gets a loss of 30 or more. So if you see any segment with a profit of 30 or more, or any segment with a loss of 30 or more is reportable in nature. Is this 30 or more? Yes. 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 Is this 30 or more? No. So ABCD becomes a reportable segment. As simple as that. So which means when you go to conduct the profit or loss segments, just add the profits, absolute data, add the losses, absolute data, take the greater figure, ignoring sign. You don't get worried that this is 200 and this is negative 300. No, for me, it's positive 300 indirectly. So I'm going to consider the higher figure, take a 10% of that because materiality test is based on 10%. So we are saying any segment which has got a profit 30 or more, any segment which has got a loss of 30 or more is reportable. So ABCD becomes a reportable segment. I hope I am clear on that. So this is a crucial point where people generally tend to get confused. I hope I am pretty much clear on the application of the second test. So this is the profit or the loss test. Let's take it further. Let's now go to the third test. So we've done the revenue test. Don't worry, I'll give you the notes later. We've done the revenue test, which is considering the focus point, external, internal revenue both. We've done the second test where the focus is in terms of the profit or loss in absolute figures, ignoring signs. And then let's have a look at the third test, which is the assets. Its assets are 10% or more of the combined assets of all the operating segments. I think that is pretty easy. You just need to consider what is the value of assets in each segment and consider that whichever segment has got 10% or more is reportable in nature. Let's take a simple example to illustrate this. I think let's continue out here itself and let's consider the data in terms of ABCD. So let's consider these 5 segments. So these are the operating segments and let's consider that you are given the data for the assets. So the assets, and interestingly, I'll tell you one thing. There might be a couple of questions coming to your mind. You'll say, what is the definition in terms of profit? No definition is given in the standard. You'll say, what is the definition of assets? Does it include a deferred tax asset, etc.? Nothing is given in the standard. Unlike the IGAP in terms of A17, where there were concurrent definitions in terms of segment assets, segment liabilities, and in terms of the profit loss, no information is given in this case. I'll tell you something very interesting, which is a clarification in the education material on the profit or loss test as I document the notes later. But I am nowhere given the information regarding what is the definition of segment assets, what a segment assets would include or not. So they've not given anything. So I think since in that particular case, the judgmental part would apply, don't worry, it cannot come in the exams. Because the examinations, they can't ask you to answer things which are subjective and involves a judgment. So you'll be simply given a data with regard to assets. Even if you look at the past examination questions, a simple straightforward data is given. So let's consider the value of these assets of these segments. Let's take some arbitrary figures. Let's say this is 30. Let's say this is 50. Let's say this is 80. Let's say this is 20. And let's say this is 10. Just add up the value of the assets of all these segments. So this is going to be 30 plus 50 plus 80 plus 20 plus 10. That works out at 190. Take 10% of this works out at 19. Any operating segments with the assets of 19 or more is reportable in nature. So this is 19 or more, this is 19 or more, this is 19 or more, and this is less than 19. Well, it is completely unintentional that E is getting excluded under every test. You might say that your examples have been excluding, E failed the revenue test, E failed the profit loss test, and E also failed the asset test as well. Purely unintentional in nature. So in this particular case, again, ABCD is going to become reportable segments in this case. So in terms of the step number 3, that is reportable segments, what do you need to do in step A? What do you need to do in terms of step A? You need to basically apply a threshold limit test. You have got 3 tests in the threshold limit. One is a revenue test, one is the profit loss test, and one is the asset test. You meet any one of them and you're able to get a list of the reportable segments, but the journey doesn't end there. In step number A, when you applied the 10% materiality test and you get a list of the reportable segments, like in my example, ABCD is a reportable segment, the journey doesn't end here. You need to go now to step number B. Now let's see what you're going to do in terms of step number B. So once you've got this information, we now need to do something more as well. Let me tell you what are we going to do, something more. So there is another test which is called the 75% test. There is another test which is called the 75% test, and let's have a look at what are we going to do in terms of that 75% test. So once you've identified that these operating segments are reportable segments because they've met the 10% materiality test, you got to go to the step number B. And in step number B, you are going to apply a 75% test. Let's see what does it say. If the total external revenue, it says if the total external revenue, the word is external revenue. When you applied the revenue test earlier, it was a combined revenue, external and internal. Now when you're going to go for this particular step number B, the focus is only on the external revenue. You're not going to see the internal inter-segment sales revenue. The total external revenue reported by the operating segments constitutes less than 75% of the entity's revenue. Additional operating segments. Additional operating segments shall be identified as reportable segments even if they do not meet the threshold limits until at least 75% of the revenue is included in the reportable segments. Well, the underlying thought process which the standard setters had in mind, that once you identify the operating segments as reportable segments, they wanted that at least 75% of the entity's external revenue gets reported in the form of reportable segments. Because let's say if you've got 5 segments A, B, C, D, E, let's say you identified ABC as reportable, then D and E is going to be collectively reported as other segments. Because if a company has got, let's say, got 20 segments, because there cannot be, a list limit in terms of operating segments. So let's say, for example, a company has got 20 operating segments, and you're able to identify, let's say, around 5 reportable segments, and then you'll take the balancing 15 operating segments as other segments. So in the segmental reporting, you're going to report all those 15 segments as one that is called other segments. So they wanted that when you make a segmental reporting, then if you say that these 5 segments are reportable, they should report at least 75% of the total's external revenue. Because if you're saying that 75% of the total revenue is constituting out of these reportable segments, I think we can definitely say, okay, rest 25% is residuary. So they wanted one more test. This is called an overall test. So the step number B, as I said, in terms of step number 3, the first step is applying a threshold limits. That is step E. After applying the threshold limits, you go to the step number B and you need to conduct an overall test. But remember, in the overall test, the test is on revenue, but we are considering only external revenue. When you were applying the threshold limits, you took the internal, external revenue both. But in this particular case, we need to consider only the external revenue in this case. So if I just go back to the example, where I give you the revenue data, let's have a look at this and apply the 75% test in this particular case. So what we got to do in this particular case, we are just going to consider the sum total of the external revenue. Let's consider what is the sum total of the external revenue, not internal. So this is going to be 100 plus 200 plus 50 plus 150 plus 20. That makes it 520. So I now need to consider 75% of this. I need to consider now 75% of this. And if I take 75% of this, it comes to 375. Now, I need to see in this particular case that the external revenue of the reportable segments, we said A, B, C, D are reportable because E failed all 3 tests. So we said A, B, C, D are reportable. Let me see, is the sum total of A, B, C, D, is it equal to 375 or not? Let's see the total. So this is, I think, coming to a total of 520. It's coming to 500. So we can see that the external revenue of the reportable segments is definitely more than 375. In case the external revenues of ABCD was below 375, I'll go to the management and tell them, please choose any one segment as reportable. Even if it does not meet the threshold limits, it's okay, because you've got a management choice out here. So if the sum total of the external revenues of these segments is below 375, you got to tell them, please choose any other segment as reportable. It doesn't make a difference that it failed a threshold limit. You got a complete choice and we'll add that as a reportable segment until and unless I meet that 75% test. We need to ensure that you report the external revenue of all the reportable segments, including the management choice, covers at least 75% of the external revenue. This is called the step number B. Then the step number C is pretty simple. Once you've identified the operating segments which met a threshold limits and which met the overall test, rest of the segments in step C is going to be called as other segments. So in the step number C, we'll club all the remaining segments as other segments. So when you're going to make a segmental report, you're going to say A, B, C, D are reportable, and the balancing other segments will be reported as one segment put together. So this is on step number 3 without any complications. I know I've not yet documented notes on this because I wanted to first give you a plain vanilla walkthrough in terms of the third step. Now we are wanting to take some complications, and after the complications only, I will be able to give you some comprehensive step notes on step 3. So first, let's consolidate this input and then take it further. So in terms of the step number 3, I made a simple 3-step model to you. I'm not giving the notes right now. I'm just making a walkthrough in terms of my step number 3. We'll introduce the complications on this. That is, step 3 is on the reportable segments. So in terms of the step number 3, we are going to go to step A, step B, and step C. Now what you need to do in step number A is you need to basically apply the threshold limits. You need to basically apply the threshold limits, and that is based on what we call a 10% materiality test. So there are 3 tests in this. You need to meet any one of the 3 tests: the revenue, the assets, the profit or loss, and you identify that, okay, this is reportable in nature. Then you go to the overall test. And in terms of the overall test, you've got that 75% test, and you need to ensure that the external revenues of all the reportable segments is at least 75% of the total external revenue of the company. If not, apply a management choice. So here you've got a management discretion as well, that if you're not able to fulfill the 75% test, tell the management, include something more, even if it fails the threshold limits. And then you get the other segments list. Because all other operating segments which could not be classified as the reportable segments is going to be called as other segments in this case. So this was a 3-step model. Now we're going to introduce some complications within each step. So what I'm going to do, as I make my discussions, things will become a little more complicated, and then we'll give you a break. We'll give you a break at a very appropriate time when the mind starts getting a little disturbed. At this stage, I think your mind should be very relaxed and easy. I don't think so. We have discussed anything technical so far. It's a very pretty easy standard indeed. So now I think let's make a walkthrough on some technicalities with you regarding these 3 steps within the 3rd step. So I am coming back to the agenda, and I am coming back to the inputs which are given back in terms of para number 11. Now watch this carefully, friends, because this can be slightly complicated, but watch me carefully. Notes I'll give you after my discussion takes place on the step number 3. Now let's watch this. If you look at the information we read in para number 11, it said an entity shall report separately information about each reporting segment that is being identified in accordance with para 5, or now I'm focusing further. He said you apply the threshold limits to the operating segments which met the 3 conditions in step 2. I repeat. So what I did, I said these are the operating segments which met the 3 conditions of step 2. Let me apply the threshold limit test. It says now do one thing. Before you apply the threshold limit test, do one thing. It says aggregate 2 or more segments in accordance with the para number 12. The standard has given us a choice. It's not mandatory, it's a choice. Therefore, I did not discuss that as a part of the initial understanding. What I've given you so far is a mandatory exercise. Applying a 10% threshold limit is mandatory. Applying a 75% test is mandatory. So all what we've discussed is mandatory. Now we are looking at the optional discussion which is given in the standard. And the optional discussion tells me that before you apply the 10% test, you can aggregate 2 or more segments and then apply the threshold limits which we discussed. The question arises, aggregating the operating segments means what? Now we given information in terms of para number 12, which talks of an aggregation criteria. So the aggregation of the operating segments may be, mind the words carefully, the aggregation of the operating segments may be done by the management before they want to apply a threshold limit test. Now what is that aggregation? Operating segments often exhibit similar long-term financial performance if they've got similar economic characteristics. If they've got similar economic characteristics. Now, aggregation criteria of operating segments is based on that they've got similar economic characteristics. Now, you would say, what do you mean by similar economic characteristics? We are given a list of what is a similar economic characteristics. It says 2 or more operating segments may be aggregated into a single operating segment if the aggregation is consistent with the core principle of this index and the segments have got similar economic characteristics. Now let's have a look at what is the concept of a similar economic characteristics. Oh, so let me just have a look. Oh my God, what did I do? Oh, so let me have a look at the similar economic characteristics. I think I need to play this one. Let me now read the concept of similar economic characteristics. So let's have a look. Let's have a look now in terms of similar economic characteristics. There is a list of 5 economic characteristics which is given in the standard. Mind the words carefully now. You need to meet all the 5. If you want to aggregate the operating segments before applying a threshold limit 10% test, you need to meet all these 5 conditions, then only an aggregation can be done. Now, what are these? It says they're similar in each of the following aspects: the nature of the product and services, the nature of the production process, the type or class of customers, the method used to distribute the products, and if applicable, the nature of the regulatory environment. He says, you prove me that there are 5 economic characteristics. You prove me that there are 5 economic characteristics. Number one, the nature of the product and service. Now you would say nature. Well, let's say, for example, the two products belong to the FMCG sector. So I would say the nature of the product and service is the same. The nature of the production process, machine intensive or labor intensive in nature. So both of them are labor intensive. The production process is same. Both of them are machine intensive. The production process is same. The type or class of customers, are you selling to wholesalers or are you selling to retailers? Maybe one particular product line is meant for wholesalers. Another product line is meant for retailers. You can't club them. So the nature, the type of the customers need to be similar. The nature of the production process, the nature of the product needs to be similar. You use a similar way of distribution of the product. Maybe you are selling one product line only offline. Maybe you're selling another product line only online. You sell it only online, not available in stores. You can see that many of the companies are selling cell phones, and certain categories of cell phones are not available offline. They're available only online products. So the method to distribute the product or services will also be a criteria. And of course, the regulatory environment as well. Like, for example, if I'm dealing in FMCG products, then I'm governed with the concept of FPO. Like, for example, if I'm dealing with some kind of financial products, then I'm governed by, let's say, authorities like SEBI. So the regulatory environment should also be similar. So you're able to say that, yes, the nature of the product and service is same. The nature of the production process is same. The nature of the types of customer is same. The regulatory environment is same. And we are saying that the method used to distribute is same. All the 5 conditions are met. I would say, okay, you can aggregate. Why are these standard setters being so stringent in terms of telling the companies to aggregate operating segments? Do you think companies would try to aggregate segments so that they are able to improve the strength of their reportable segment, a segmental reporting? Why not? If I want to improve the strength of my revenues and profits, manipulations can be done. So the standard setters have one thing very clear in mind, that if you want to aggregate certain operating segments, what is important is that you first meet me the aggregation criteria. If you fulfill all the 5 parameters, yes, I'm happy. You can aggregate the operating segments, because once you aggregate the operating segments, they're going to be reported as one reportable segment. If, for example, you aggregate A plus B as 1, it's going to be reported as one operating reportable segment, which improves the strength of the disclosures as well. So the standard setters were very stringent that, okay, once you meet these 5 conditions, then we are okay, you can aggregate. But this aggregation is purely a management choice. It's purely an optional category. Right, friends? I hope I am pretty much clear on the discussion so far, right? Okay, so this is one part. Now let's go to the other part. That means in step number 1, that means in step number A, I'm looking at the step number 3. In terms of step number 3, what I've now decided is in step number A, there are 2 sub-steps. There are 2 sub-steps. One is that you want to aggregate, you may aggregate. But if you want to aggregate, you need to fulfill all the 5 conditions. So you want to aggregate, you can aggregate, or if you don't want to aggregate, you directly apply the 10% test. So the company has got a step number 1A. Choice, you want to aggregate, first aggregate, and then go to 1B. No, sorry, then go to 1E. This is like sub-step 1 and sub-step 2. So you go to A1, aggregate if you want, and then you apply the 10% test. 10% test is mandatory, but aggregation before the 10% test is a pure option choice. Now let's look at another interesting input stream. Now there's another insight which the standard setters have done. Let me just go to another aggregation test now. Now let's go to another aggregation test and watch this carefully. So I'm taking you to another aggregation test as well. So let's have a look at another aggregation. You will see some very interesting inputs coming. Now look at the para number 14, which is again on an aggregation. But this aggregation is at what stage? Watch it. It says in para number 14, an entity may combine information about operating segments that do not meet the quantitative threshold limits with information about other operating segments that do not meet the quantitative threshold limits. Now I'm looking at the step number B. I'm looking at the step number B in this case. Now see what we are saying. First of all, what you did, you got a list of operating segments in step 2. Now hear this very carefully. You got a list of operating segments in step number 2. I said, let's do one thing in step A. You want to aggregate any operating segments, please do that. You got a choice. You identified a list of operating segments. You want to aggregate them. You meet the 5 conditions, and then you can aggregate and then apply a 10% test. And then apply a 10% test. Now, what the standard says in this particular case, you applied a 10% test. So what do you get? You get segments which pass the test. You get segments which fail the test. So after applying the 10% test, you get segments which pass the test and you get segments which fail the test. Now, which pass the test, it's okay. Now, what you can do is, if you want, you can aggregate. If you want, it's again optional. It's again optional. If you want to aggregate the failures, you can aggregate the failures. You cannot aggregate a segment which passes and fails. You cannot aggregate a segment which passes a test and fails a test. You cannot aggregate passing and failures. You can't aggregate people who pass. You can aggregate failures only. See what it says. An entity may combine information about operating segments that do not meet the threshold limits with other operating segments that do not meet the threshold limits. So you can now aggregate the failures. And it says, after aggregating the failures, only if the operating segments have similar economic characteristics and share a majority of the aggregation criteria. Now, in this particular case, we said you can aggregate the failures, and this aggregation of failures is based on the fact that you meet not all the 5, but you meet majority of the 5. Can you see the difference? When you aggregated before the 10% test, it was a condition that you meet all 5. But when you applied the aggregation criteria after the 10% test, we said, number 1, you aggregate the failures, and you can aggregate the failures if these operating segments which failed the test meet majority of the 5 conditions, not all the 5 conditions. But this is again a pure management choice. In the education material, they've done a wonderful discussion in terms of elaborate the difference in terms of the aggregation criteria in para number 12 and the aggregation criteria in terms of para number 14. What a brilliant analysis it can be. And they've done that good analysis. In terms of para number 12 and para number 14, the similarity is that they're both optional in nature. In terms of para number 12 aggregation, it is aggregation before applying the 10% test. In terms of para number 14, it is applying aggregation after the 10% test. That is one dissimilarity. In terms of the aggregation in para number 12, you need to meet all 5 conditions. In terms of aggregation, in terms of para number 14, you need to aggregate, in this case, meet majority of the conditions. So they are both optional. But the distinction is, one is applied before 10%, one is applied after 10%. One is applied if you meet all 5, one is applied if you meet majority of the 5. And the conditions in terms of the second aggregation after 10% test is that you can only aggregate the failures. You can aggregate only the operating segments which failed the test. You cannot aggregate segments which pass or which pass fail. You can aggregate only two segments which fail. So that is the aggregation criteria as well. Now let's take it further. So now let's take it further. That 75% test is done. Now you would also come to the picture. You would also have another small little question now further. And you would say that once you aggregated these particular segments, do we need to again apply the 10% test as well? Yes. Once you aggregated the failures, the aggregation of the failures will increase the chance of meeting the 10% test. Isn't that so? Individually, an operating segment could not pass the 10% test. So what are you doing? You're saying, okay, let me aggregate you with another segment. Two failures put together, one gets 25 marks, another get 25 marks. You aggregate the marks of two people and they pass in the exam. So the concept applied out here is that you're aggregating the failures which failed a threshold limit, and once you aggregate them, then if you apply a 10% limit, they will definitely pass. So given a choice to the management that you feel that this segment is quite important, so not a problem, you can aggregate at this stage. Okay, so I hope I'm pretty much clear on the two concepts of aggregations which I've given you. Okay, so this is the inputs and a few clarifications are there, but I think I made my framework. So let's do one thing. Let's give you a break now at this stage. I guess now this must be a little technical as well. So let's give you a small little break for 10, 12 minutes and then we commence back. I'm going to document all the notes in terms of step number 3. We'll do some practical illustrations also with you because disclosure requirements is not a great thing, because I'll just tell you, what kind of disclosures are done. Very quickly, we can tell you what to read on the disclosure aspects. So we'll make some documented notes on this and we'll do some practical illustrations from the study mat on the step number 3. So I guess any questions so far, friends? Otherwise, we'll take a short break at this stage. I think no questions coming in so far. So it's almost around 8:47, 48. So let's meet you in 10 to 12 minutes time, friends. Enjoy your break. Welcome back, friends. So I think first of all, let me just document the entire procedure in terms of the step number 3, and then I think we'll start doing some practical illustrations with you. So let me see if there are any questions in between so far. No, I think today has been a little easy journey. So not many questions coming in because we're not a very complicated standard English. Okay, so let me first document the detailed notes to you on the step number 3. The step number 3, as we said, the focus is in terms of reportable segments. We're going to break this in various sub-steps. So step number 3 is reportable segments. So we're going to break this in terms of various sub-steps. So when we're looking in terms of the reportable segments, my sub-step number A in this case is, we will first of all make a list of, rather I would say you can pick a list. Why make a list? So we can pick up a list, pick up the list of operating segments identified as per step number 2. So what we can do, we'll pick up the list of operating segments. Now we've got two choices. Now in this particular case, the entity has got two choices. So the choice number 1 in this case is apply 10% test, apply a 10% test, that is threshold limit, that is threshold limit test. So we apply a 10% test, that is a threshold limit test. Or what do? We first aggregate operating segments which have similar economic characteristics. Underline the word similar economic characteristics. Underline similar economic characteristics. So we will first aggregate the operating segments which have got similar economic characteristics, and then apply 10% test. And then apply a 10% test. So this is a complete choice. So we'll just still make a little mention further that this aggregation is purely optional. Though I mentioned the word choice, but I think still like to make a mention that it is purely optional in nature. So the entity has got a pure choice that we aggregate and then apply a 10% test. Now we make a mention out here on the similar economic characteristics, and on the similar economic characteristics, we need to meet all 5 conditions. We need to meet all 5 conditions, and let's make a list of those 5 conditions with the keywords which we need to remember. So in terms of those 5 conditions, we've got number 1, nature of product or services. Nature of product or services needs to be same. Then we can say nature of production processes. Nature of the production processes has to be similar. So underline the word nature, underline the word production process. Number 3, methods of distribution. Methods of distribution. So underline methods of distribution, that needs to be similar. Then number 4, so nature of the products or service, nature of production processes, method of distribution, and then we can say regulatory environment. The regulatory environment has to be similar. So underline the word regulatory environment. And the number 5. So production process is done, method of distribution is done, nature of the product is done, regulatory environment. What was the other condition? I think maybe slipping it out. Let me just pick up the list. So in this particular case, so this was the type of customer, the type of customers. So I thought before I write something incorrect, let me just carefully evaluate and write. So then it is the type or class of customers. The type or class of customers, underline the word customers. So these are the focus 5 parameters. So I think this is pretty much clear now that in terms of the step number 3, we're looking at the step number A. So when you're looking at the step number A, you pick up the list of operating segments as per step 2. Either you apply a 10% test or you first aggregate and then apply a 10% test. But if you want to aggregate the similar economic characteristic list is already there with us. Okay, I guess you've taken a note on this. Now, let's, I think, give some more details in step A on the 10% test. So let's put down some inputs on the 10% test. Now, as far as the 10% test is concerned, so when you're looking at the 10% test, in this particular case, we've got 3 kinds of tests. So on the 10% test, we've got 3 tests and we need to meet any one is to be met. So any one is to be met in this particular case. So when you're looking at the 10% materiality test, any one of the tests need to be met. The first one is revenue test. The first one is the revenue test. The second one is, you can say, the profit or the loss test. And the third test is what we call the asset test. So what do we need to do under each of these tests? We can say in the revenue test, the revenue in the brackets I'm putting as E plus I. E means external and I means internal. I put a short form, external, internal. So the revenue external, internal of operating segments is supposed to be greater than or equal to 10% of combined revenue. And here again in the brackets, we can say external plus internal of all operating segments. So we need to consider that the revenue of the operating segment is 10% or more than the combined revenue of all the operating segments. In terms of profit or loss, what we're going to do, in this particular case, we'll first of all get absolute figure. We'll get the absolute figure, so underline the word absolute figure of profit and loss. And plus pick the figure which is greater. Pick the figure which is greater. So underline the word greater. So what do you need to do? Get a list of the profits separately, get the list of the loss separately, get the absolute figures of profit and loss separately. So let's put it separately. So get the profit or loss figures separately and pick the figure which is greater. And then in this case, what we're going to do, we will consider the profit or loss of operating segment is greater than or equal to 10% of the higher figure. So it is 10% or more of the higher figure which you picked up above. So in that particular case, it becomes a reportable segment. And then on the assets test, that is pretty simple. So we will consider in this particular case, assets of operating segment is greater than equal to 10% of the total assets of all operating segments. Right, so that is a detailed input on the 10% test which we need to conduct. So there is a revenue test, there is a profit or loss test, and there is an asset test. You meet any one of these tests and the threshold limit is met. So this is step number E. So I think I've documented everything what I said, from the concept of aggregation, the parameters for the aggregation, to the 10% test as well. Let's take it further. Let's go to the next step now. So in terms of the step number B, so this is now the second step B. This is what we need to do. We now need to conduct, or rather, I think let's do one thing. We need to add on another input as well, and that is aggregation. So on the step A, substep A only, let's put a note. After conducting 10% test, after conducting the 10% test, management has a choice. So again, there is a choice at this particular stage. So the management has got a choice, and there are again two choices available. So in this particular case, I can choose to go to step B. So we can say the first choice is we go to step number B, or we've got a choice that we aggregate, or we've got a choice that we aggregate operating segments which failed, 10% test. So underline the word fail. So I think just on a safety side, I'd also like to again make a mention that this aggregation is purely optional in nature. This aggregation is completely optional in nature, that you may or may not aggregate. And I think let's make the mention further that for this, we need to meet majority. We need to meet majority of the 5 conditions. There is no inputs given in the standard which tells us that what does a majority mean. It only says that we need to meet majority. So I would say almost like 4 conditions would be good. So we need to meet majority of the 5 conditions stated above. So we need to meet majority of the 5 conditions which are stated above. So this is a pure choice. You can go to step number B, apply the overall test, or you can aggregate the operating segments which failed a 10% test. But if you want to aggregate, you need to meet the majority of the 5 conditions. And then we can say, then go to step B. Then go to step number B. So after this, we go to the step number B after aggregation. So aggregating or not aggregating is a pure choice for the manager. Okay. Then we go to the step number B. In which case now we need to conduct an overall test. So we need to conduct an overall test, which is what we call the 75% test. Now, in terms of the 75% test, what do we need to do? We need to consider the revenue, brackets only external, no internal. So in the brackets I've written E, the external revenue of operating segment, the revenue of operating segments, rather I would say oblique reportable segments. So the revenue of the operating or reportable segments should be greater than equal to 75% revenue, that is combined revenue, and in the brackets we put down external. So it is 75% combined external revenue of all operating segments. So we need to see that the sum total of the revenue of external revenue of the reportable segments is at least 75% of the external revenue of all segments. And we can make mention if this condition fails. If this condition fails, management has to select any operating segments as reportable segments, even if even if it fails 10% test. So even if it fails a 10% test, so management is going to complete discretion. Management can select any operating segments as a reportable segment, even if it fails a 10% test. And I think let's clarify one more agenda out here. When you say aggregate failures, you can aggregate fail plus fail. That is possible. You cannot aggregate pass and fail. You cannot aggregate pass and pass. That's a little clarification further, that when you're aggregating the segments in terms of the failures, you need to aggregate failures, not a pass and fail, not a pass and pass. Right. So that was the step number B. And I think I can fit the step number C here itself. So in terms of the step number C, it is simply getting the other segments. It is simply getting the other segments as balancing fill. So this is like the residuary segments, which are not considered as reportable. You just aggregate all the segments which fail any kind of test, put them as one, that is called other segments. Right. So I think this is completely taken care. So I think I've given you the step 3 in detail. Let's now do some practice with you from the study material. Let me see if there are any questions so far. Okay, I think there is a question, Namrata, you've got. Nature of product and services production. Okay, that was a list which you're giving. That's right. And okay, I think you answered the questions on that. Okay, that's great. That's great. Okay, so this is done. Now I think let's pick up some questions from the study material on this. Of course, these notes will be shared to you. So no worries, it will be shared on the ICI portal. Okay, so we've done, I think, 3-4 illustrations at the inception. Let me now go to, yes, let's have a look at illustration 5. When I looked at the study material earlier, there were a few questions which were not there, but then, there is a continuous updation of the study material which takes place, and the questions on aggregations have also been added. Like if you remember, a question on the operating segments in terms of the review of only revenue data was added because the clarifications came in and the updation was a continuous process. So please always use the latest study material for your references. Okay, let's have a look at the illustration number 5. So illustration number 5, that is on page 11.94. So page number 11.94, we're looking at illustration number 5. It says XY has operations in France, Germany, UK, and India. We can see different geographical locations are mentioned. It wishes to apply the aggregation criteria on a geographical basis. Wow. The company is operating under different geographical areas and they want to aggregate things. What do you think? Let me, I think, put across the question directly to you without reading the answer. What is your thought processes? Do you think in this case, if you're aggregating the things on a geographical basis would make sense? Look at the para number which gave you the aggregation criteria: nature of product and services, the nature of the production process. So it was focusing on the types of the customer, products and services. Do you think aggregating on a geographical area would make any sense? What does your logical inputs tell you? Okay, I think the answer is quite obvious. How will the aggregation criteria apply in the given scenario? So let's have a look at this particular case. So let's see what is stated in the solution. So in this particular case, I think it is very difficult, but not impossible at the same time. I'm saying it is difficult, but not impossible at the same time to meet the criteria of aggregation. So it says X Limited needs to assess and prove that each country possesses the same economic characteristics, factors like exchange control regulations, the currency risk, and the economic conditions are required to be considered. Considering the above factors, it may be possible to aggregate the results of these countries, because you can see France, Italy, and Germany are going to fall within a European region, and the results of UK and India may be separately reported. No aggregation is permitted. So little subjective indeed, where you can just give an answer that maybe there's a possibility of aggregating those countries which have got a similar kind of foreign exchange control regulations, etc. And you could aggregate other set of countries as well, slightly subjective. So we cannot rule out the possibility of aggregation, but at the same time, I think it seems to be quite challenging, but we cannot outrightly say a no as well. Okay, let's see what inputs we got at your side. Nothing so far. Okay. Okay, let's, I think, take it further. Now let's have a look at another question with you. Illustration number 6. So let me go to the illustration number 6. So illustration number 6, we are given that X is engaged in the business of manufacturing and selling papers. So they are manufacturing and selling papers, and we've got varieties of paper like adhesive paper, anti-rust paper, antique paper, art paper, etc. And they're manufactured and sold by X. Should you classify these papers into different segments? What do you think? That if a company is selling different kinds of papers, and do you think they could have a different production process? Maybe. There might be a similarity in terms of production process up to a certain stage. But of course, the type of customers will be different. There is a possibility of a method of distribution also being different. The regulatory framework could also be, of course, be different. So I don't deny the possibility that in this particular case, they may have different kind of things as well. Let's have a look. 2 or more operating segments may be aggregated into single operating segment if they've got similar economic characteristics and the segments are similar with respect to various factors: nature of the products, production process, customer, method of distribution, and regulatory environment. So that's a list of the 5 factors which we've already made a mention earlier. Now, in this particular case, looking at the kind of papers, we are very clearly made a mention. It says, in case of X Limited, so far as the varieties are concerned, if all the factors such as the nature of the product, production process, type of customer, method of distribution, regulatory framework are common, there is no need to create different segments for each type of paper. So as we said, it is a subjective assessment. So you should never make a mention that it's a yes or it's a no. You can only say that if these parameters which are given in the standard are met, then yes, you could aggregate them. So it's an open-ended question, because with the given facts of the case, you cannot give a conclusive decision, because you need more data in order to make an analysis. Okay. So this is one. Let's now go to a question on a 10% test. Very carefully, go through this illustration 7. I don't know if a time will permit me to go to illustration 7. If it does, I'll perhaps take that. It's a beautiful illustration, and I think it wonderfully gives you a lot of conceptual understanding. It's a theoretical kind of illustration, but I think it's a beautiful illustration to understand the concept of segment, whether we identify that as a reportable segment or not. So if time permits, I'll go through that illustration, but do go through that illustration 7. Let me first do a question now, a practical illustration on step 3. So let's go to the illustration number 3 to begin with. Okay. So let's go to the illustration 8. This is on step number 3. So let's have a look at illustration number 8 in the study map. So we will apply our step-by-step model on step 3 in terms of the 10% test and in terms of 75% test. But in any case, since aggregation is optional, unless the question tells me to apply the aggregation test, we're not considering that. Okay. It says X has identified the following business components. We are given the revenue, external, internal. We given the profits. We given the assets. This is for pharma. And similarly, we are also given some more information further. And this information which is given. So this is for FMCG, and it is Ayurveda as well as others. So we're given some more information on that as well. And then it says which of the segments would be reportable as per the criteria prescribed in Ind AS 108. So I think since it's a practical illustration, let's solve it. I'm not going to read the answer. Let's solve it on our own independently. So let's begin the journey. So I'm going to solve it here itself. So let's, I think, solve the illustration number 8. So we're going to go step by step in terms of illustration number 8. So what do you need to do in terms of this? We have got a list of operating segments. So let's go to the step A. Let me call it a step 1. Now you would say, can I go with a step-by-step model in terms of giving the answer? Of course, yes. Not a big deal. If you're saying step 1 is a 10% test, step 2 is a 75% test, and then you can say step 3 is the other segments, pretty okay. So let's go with the step number 1, and we're applying the 10% threshold limit test. So in this particular case, I'm organizing the data in terms of the 3 tests. Well, you can make a chart. I'm just putting arrows, but you can make a chart as well. Let's conduct the revenue test. And then let's conduct the profit or loss test. And then let's also conduct the asset test. Let's, I think, pick up the data and let's get the information. So if I go back, so I am given, first of all, the revenues. Now, what revenues am I supposed to consider? I'm supposed to consider the external and the internal revenue both. So we will consider the sum total of 108 plus 45 lakhs. That makes it 153 lakhs. So when I apply this test, we will consider 153 lakhs is the total external internal revenue. 10% of this, that comes to 15.3 lakhs. So I need to now identify that which particular segment is got a revenue 15.3 equal or above. So let's have a look at the revenues now. So if I look at the revenue of pharma, I guess we can pretty much see that the revenue is supposed to be definitely more than 15.3 external internal. Pharma is in the list. Then if you look at FMCG, no. If you look at Ayurveda, no. If you look at the others, yes. So we can say that we've got pharma as others. That's it. We don't get any other on the basis of the test results. So let's go back. So based on this, we can decide that in this case, we've got 2 segments which are going to be reportable. One is pharma, it meets the test, and one is others, which meets the test. I'm not taking a percentage. Alternatively, you can calculate a percentage as well. You can start calculating the total revenue of each segment as a percentage of 153. So what I've done, instead of taking a percentage, you can see the alternative solution of the study mat as well. They've taken a percentages. The other way is I just looked at the absolute data. This is the total external internal revenue. 10% of this comes to 15.3. So any segment with external internal revenue 15.3 above and above is supposed to be reportable. So pharma and other comes in the list. Now let's go to the profit or loss. I guess there is a profit for pharma that's 20 lakh, and we can see it's all profits throughout. So we've got a profits to the extent of 30 lakhs. So 30 lakhs, 10% of that would mean 3 lakhs. Let's see which segment has got 3 lakhs and above. So as far as pharma is concerned, yes. And as far as FMCG, no. Ayurveda is concerned, no. And others are concerned, yes. So again, only 2 segments would meet the results. So let's go back. And we can consider in this case, the profits are 30 lakhs in all. 10% of the total profit works out at 3 lakhs. Oh yes, that reminds me, I have to tell you something interesting at this stage. So that is equal to 3 lakhs, and the only 2 which meets this test again is pharma. And this meets the other segments meet this particular test. Now, something very interesting to tell you. The question arises, let's say, for example, a CODM reviews the profits of each operating segments. This is outside this question I'm just discussing. Let's say there are 3 segments ABC, and the CODM looks at the EBT of A, looks at the EBIT of B, and let's say it looks at the EAT of C. So when the chief operating decision maker evaluates the operating results and in terms of profits, he's looking at different elements of profit for each segment. He looks at the EBT for A before tax, before interest and tax for B, and earning after tax for C. Now the question arises, when you conduct the profit or loss test, what profits do we consider? There is nothing given in the standard, but there is a wonderful clarification which is given in the education material, and it says that you need to consider the lowest base out of them. You need to consider the lowest base out of them, and the lowest base in this case is EBIT. Because first you got to get EBIT, then you got to get EBT, and then you got to get EAT. So if the profit measurements for different segments are different, in those particular cases, you need to consider the least base out of them. So in this particular case, the least base is EBIT. So when you want to conduct the 10% test, you will organize the EBIT for all the operating segments and then conduct the test. So any segments 9 lakhs or above is reportable. So I think as far as Ayurveda is concerned, no. Others are concerned, no. But FMCG is a yes. And pharma is a yes. So pharma and FMCG would enter the list. So in this case, pharma as well as FMCG would enter the list. So in this particular case, 90 lakhs, I think it was 90 lakhs, I guess. The total assets 90 lakhs, yes. So 90 lakhs, 10% of that works out at 9 lakh. So any segment with an assets 9 lakh or above in absolute figures becomes reportable. So based on the step number 1, that is a 10% test, let's see what is a list of the reportable segments. Then we'll go to the step number 2. So we can say pharma is in the list, that is 1. Then we can see FMCG is in the list, that is 2. And we've got others in the list, that is 3. So these are the 3 reportable segments, but your journey cannot stop at this stage. Now you need to go to the step number 2 and apply an overall test, which is the 75% test. So we go to the step number 2. And in terms of the step number 2, we're going to conduct the 75% test. And now caution. When you apply the 75% test, your focus now is only on the external revenue. Unlike when you conducted a 10% test, it was external, internal both. So let's have a look at only the external revenues of all the segments and the reportable segments. Now, as far as the external revenue is concerned, it is 108 lakhs. So let's see what is the external revenue of the reportable segments. So we can say 97 lakhs is for pharma. Then FMCG is 0. And then others is supposed to be 8 lakhs. So it comes to 105 lakhs. So the reportable segments have got external revenue 105 lakhs out of 108 lakhs. So let's see the percentage. The total external revenue of the reportable segments as a percentage of the total external revenue of all the segments is, I think, more than 75% undoubtedly. So that works out at 97.2%. So we can say there is no need of adding any additional segments into it. So now we can go to the step number 3 and we can take the other segments as a balancing figure. I think the other segment is just 1. Pharma is taken on the list and we just left with Ayurveda. So Ayurveda is going to be reported as other segments. So if I go to my step number 3 and we look at what is going to be reported as other segments, there is duty, then in this particular case, Ayurveda is going to be reported as other segments in this case. Simple and straight indeed. Wow. So I think that was pretty simple illustrations with no negative list of profits or losses given. So we applied a step number 1, getting the 3 test, and then the step number 2, getting the overall 75% test, and then identifying the balance residue as other segments as well. Okay, so far, so good. I guess if I ask you at this particular stage, what is your comfort zone on this particular standard? I'm pretty sure the comfort zone should be almost like 9 or 10. If not 10, it should be almost around a 9 or 10. What do you say? What's your comfort zone on this particular standard? I think it will take you barely around 10-15 minutes to revise the entire standard on this, because the focus mainly, the criticality is mainly in terms of step 3. CODM is not a big deal. Operating segments is not a big deal. And I think even in terms of step 3, if you remember, the crucial points of what is to be taken under each step, it's not a big deal. Okay, I think Hardhan Syed, sir, could you explain that 75% test again? Okay, let me explain that 75% test again. Well, in the 75% test, what we need to do in this case is we need to see that the external revenue of the reportable segments, we identified pharma, we identified FMCG, and the others as reportable segment. When I conducted the step number 1 on the basis of 10% test, you said the pharma, the FMCG, and the others are reportable segments. So just see what is the external revenues of these segments. If you look at the external revenues of pharma, it is 97 lakh. One, if you look at the external revenue of FMCG, it's 0. And if you look at the external revenues of others, it is 8 lakh. So what is the sum total of the external revenue of the reportable segments meeting the 10% test? 97 plus 8, 105 lakh. Take that 105 lakhs as a percentage of the total revenue, total external revenue of all the reporting segments. So that's what I did. I took 105 as a percentage of 108. This is the external revenue of all the reportable segments divided by the external revenue of all these segments put together. That's 97.2. Because if you don't meet the 75% test, you need to tell the management to include any other operating segment as reportable, even if it fails a 10% test. Right? I guess I'm clear on that. Okay. Koshki, you said, I have a doubt in step number B. If 75% fails, will we do any question about it? Well, in this particular case, I think there is one particular question, maybe in the education material or study, I don't remember clearly. But we are given one fact. Now, I said, since you raised a very valid question, let me give you 2-3 inputs now. Let me give you 2-3 inputs at this stage. I am going back and giving you some wonderful clarifications which are given in the study. And I'll tell you how the management can take a choice in terms of things. So let me just, I think, give you some quick inputs out here. Just a second. Let's come out here. See the inputs, a few paras which I didn't read, but I think since you raised a good question, let me, I think, give you, okay, 9 out of 10 is a comfort zone. That's pretty good indeed. Okay, now let me give you a few insights in terms of that if a 75% test fails, then what is it? And I'll give you 1 or 2 more inputs also at this stage. Now let's have a look. It says out here in terms of para number 17, it says if management judges that an operating segment identified as a reportable segment in the immediately preceding period is of a continuing significance information, that segment shall continue to be reported separately in the current period, even if it is no longer meets the 10% threshold. So when I fail to meet the 75% test, I will look into the fact that was there any segment which was reportable last year because it met a threshold limit, but this year it fails a threshold limit. The management says, yes, it has failed a threshold limit, but we feel that it is a very important segment to be reported. So even though it fails a 10% test this particular year, it still becomes reportable. So when the management is making a choice of calling a particular operating segment as reportable, we will definitely give a consideration to the fact that is there any segment which was reportable last year because it met the limits, but it is not reportable this year because it fails the limit. Let's consider that as a part of the list. That can be one consideration. Okay, then further, it says if an operating segment is identified as a reportable segment in the current period in accordance with the threshold limits, Segment data for the prior period presented shall be restated to reflect the newly incorporated reportable segment as a separate segment. Now, we know one thing further, that when a company presents the financial statements, we always present financial statements for the current period as well as for the prior period as well. There is a last year financials and there is a current year financial. Now, let's say, for example, a particular segment is reportable this year, but it was not reportable last year. So when I'm going to present the comparatives of the previous year, am I going to make a restatement of the previous year segmental reporting? Yes. But this was not related to the management choice, but this is one or two interesting clarifications given. So one clarification is, I'll give you some short notes after this. Number one, if a particular segment was reportable last year, but it fails to become reportable in this current year, you still got a choice that if the management feels that the segment is important, make it reportable. Second, if a particular segment is reportable this year but was not reportable last year, then in this particular case, you need to give a restated segmental information for the previous year. Another interesting thing, and that is with regard to the limits. There may be a practical limit to the number of reportable segments. I can't overburden my segmental reporting by giving information which is a huge, massive number of information. So it says there may be a practical limit on the number of reportable segments, beyond which segment information will become detailed, although no precise limit has been determined as for the number of segments. But it says generally, if it increases above 10, the entity should consider a practical limit is reached. There is a very interesting question in the education material. And it says, what is the number of reportable segments, we should generally limit to? So we are saying in this particular case, not more than 10. So not more than 10. So this is a clarification given in the standard itself, that generally, if you reach a limit more than 10 reportable segments, the management should think, it's time that we restrict the number. So there is no limit as such, but generally it should be restricted to 10. So these were few clarifications. I guess your question might have got answered, I think, Koshki. Okay, so let's now give you some few clarifications at this end. Since we've already did this, let's give you a few input notes for. So let me add a few further notes as well on this area. So let's call them as clarifications. Let's call them as clarifications. So there is a clarification number one. This is previous year and this is current year. A particular operating segment became a reportable segment because the 10% test was passed. In the current year, the same operating segment could not become a reportable segment because the 10% test fails. Because the 10% test fails in this case. So you passed the 10% test in the previous year, but you failed the 10% test in the current year. So what do we do in this particular case? Management may, I'm using the word carefully, management may include such operating segment as a reportable segment for current year as well. So they were choice, they can apply the judgment and they can say that it seems to be quite significant. So we want to still take it as a part of the current year segments, even though 10% test fails, even though the 10% test fails in this particular case. So that is one clarification. Second clarification. The second clarification which is given is, this is previous year and this is current year. A particular operating segment became a reportable segment because the 10% test was passed. Reverse of the first case. But this operating segment did not become a reportable segment because the 10% test fails in this particular case. So what we do in this particular case is a restatement. So what am I supposed to do in this particular case? The previous year comparative report, segmental report. So the previous year comparative segmental report has to be restated, to incorporate it as reportable segment for previous year. So in this particular case, we'll have to make a restatement of the previous year segmental report and incorporate this as a reportable segment. And there is a clarification number 3. So is there any practical limit on reportable segments? Is there any practical limit on reportable segments? We can say generally should not exceed 10. Generally should not exceed 10. So generally it should not be more than 10 reportable segments in a company. So these are few clarifications which are given in the standard itself. Well, okay, so this takes care of another aspect of discussion. I guess you've taken a note on this. Now let's get back to the study, because there's one particular illustration which I just want to make a quick run through with you. It's a very simple illustration, but it gives us how the formatting of a segmental reporting will be done. So let me just come back to the study material, and we've done the questions on the limit parts as well. So now there is a particular illustration which is given on the area of making a complete statement. Okay, so this is, I think, given in the test your knowledge area. And this is, this is another interesting chart. I would say please go through that. I've already covered that in detail. But I'll just quickly, I think, take you a run through. I've already covered this in my step. This is a beautiful illustrative flow chart diagram, which I've already covered with you. And this explains my step number 3 in the form of a flow chart. So this is a flow chart which is also given in the appendix to the international standard. There is IFRS 8, and it's reproduced out here for convenience. So let's just have a quick look at this. This will give you a little more clarity of thoughts with reference to our step number 3. See what it says. Overall determination. It says overall determination of reportable segments based on management reporting system. Do some operating segments meet all the aggregation criteria? The answer is yes, aggregate if desired. So can you see, before you apply the 10% test, you're looking at the aggregation. So I said there was a choice. So do some operating segments meet all the recognition criteria? If it is yes, you can aggregate if you want. And if they don't meet, no problems, you go to the 10% test. So either you aggregate if you want to, if you meet the conditions, or you don't aggregate and come to the 10% test. Do some operating segments meet the quantitative threshold limits, which is a 10% test? If you say yes, they meet a 10% test, then in that particular case, these are supposed to be reportable segments. And if you say no, they do not meet this particular test, then he says do some remaining operating segments meets a majority of the aggregation criteria. Can you see the word all out here? And you can see the word majority out here. I've already covered all that aspect. And then it says if the answer is a yes, then you can aggregate if desired. This is again option, because when you say it is desired, we said it is purely an option. Here also we said the aggregation is purely option in nature. And if you say no, then you go to the overall test, identify the 75% test. And if you meet this test, they're reportable. If you don't meet this test, then you need to consider additional segments, ask the management, add some more segments so that the list gets completed. I've already given that in my 3-step model view. And then it says this was my 3rd step, aggregate the remaining segments as other segments. So I've already given that flow chart in terms of a 3-step model in the step number 3. That's already covered. Okay, so these are certain differences in the IGAP. Now this is the question which I'm talking of, which I think we just need to go through. So I'll just quickly spend some time making a run through of the TYU2, test your knowledge, TYK. So test your knowledge, test your understanding, and this is a question number 2. Now, this kind of question has come, I think, once in the exams as well. The figures were different, but the question was exactly similar. So we just need to prepare a segmental report. So I would say in terms of step number 4, this is a good question. I'm just going to make a quick run through with this particular question because it's just organizing the data. The data is already given in the question. You just need to put it across and make a format. So I'm just going to quickly run through with this particular answer. It says X is operating in a coating industry. Its business segments are comprising of coating and others, consisting of chemicals, polymers, and related activities. So they've got basically 2 operating segments. One is coating and one is other. It says certain information in the financial year is given. You are given the external revenue, and that is including GST. And we're given the GST separately. Then there is other operating income. The results would mean the operating results, the profit or loss, and the assets and liability information is given. So basic information about the segments regarding the revenues, regarding the profits, and regarding the assets and liabilities are given. And then in the additional information, it further states that there is an unallocated income not related to any particular segment. There is an interest and a bank charge. And there is an income tax expense comprising of a current and a deferred tax. Then there is unallocated investments. And we are also given unallocated liabilities. And we're given depreciation, which is a non-cash expenditure information. And there is a capital expenditure information. Now we're going to see how this all is going to be organized in the form of a report. And then further, we are also given more information as well. And we are given a further more information. In this case, it says revenue, which is given outside India, and the segment assets outside India is given. So till now, we were given a product information, but there's a little information which is given for a geographical area as well. So based on the above information, how would you disclose the information? So this is like my step number 4, how you would make a segmental reporting. So focus on step 4. About reportable segment revenue, 1, profit or loss, 2, assets and liability, 3 and 4 for the financial year X1, X2. Trust me, all the information which is given in the question is just to be fitted in a particular kind of format. So I'm just going to quickly give you a run through of how this information is going to be presented. So let's have a look at the solution with you. So let's see how we're going to present this information. So let's have a look at the segmental report in this case. Now, in terms of the segmental report, we can see that first of all, the focus is in terms of external revenue. And this is the information which is gross. Gross means that this is including GST. But when you prepare your income statement as well, you always present the information of revenue that is excluding GST. You've already seen in Ind AS 115 that the GST is a collection on behalf of a third-party government. It's not your revenue. So the GST has been subtracted and the net revenue is being presented. And then you've added the other income and a total revenue is being presented. So this is one information which is reflecting the revenue data, the revenue which is excluding GST and the other operating income. So they've given the revenue data segment wise. So all this information is clearly given in the question. So I'm not worried on how you're going to get that data. The next information to be given is on the results. The results in terms of profit or loss is already given, but that profit loss is without considering any unallocated incomes and unallocated expense. So in the additional information, certain unallocated incomes and expenses are given. So we won't consider the unallocated income net of unallocated expense, reduce it from the total column, and you're going to get the profits from operations before taking the interest, before taking the taxation, and the exceptional items. So we're going to get the profits before 3 things. One is the profit without taking the interest, the tax, and the exceptional item. There are no exceptional items given in this case. So first of all, we're going to take care of the interest in the total column. Then we're going to take care of the exceptional items as well. And then we're going to take care of the tax. So once you reflect the results, there are three focus on the results, that you reflecting of profits without considering the tax, the interest, and the exceptional item. One by one, reduce the interest, reduce the exceptional item, and reduce the amount of taxes as well. So there is a second component of the information given. So that is the second component of the information given, and you are able to give the profits after taxation. So revenue is one information disclosed in a proper format. Results is another information disclosed in a proper format. Then the third information is other information, where you want to disclose about the assets, you're going to disclose about the liabilities, and you're going to give other information. So three inputs out here in the other information: the assets, the liabilities, and the other information like depreciation, like capital expenditure. So segment assets are given, investments are relating to the entire company, unallocated assets relating to the entire company. Segment liabilities are clearly given in the question, unallocated liabilities in the total, share capital reserve and surplus, that is other equity again in the total column. So you're giving the information about the assets segment wise and total for unallocated, liabilities segment wise and total unallocated, and every information is very clearly given in the question. Is just organizing the data. And then you make the capital expenditure depreciation information given. And since we were also given information on the geographical area, so at the end of the segmental report, because the entire focus in the segmental report is on product segments, but there is some information which is given. So as an additional information, the information about the geographical areas can be given: revenue within and outside India, assets and capital expenditure. Whatever information is available where you can give the information within and outside India, that also gets organized in this report. So this was one of the biggest illustrations, and this kind of illustration has already come in exams as well. Right, I think I'm pretty happy with the report I think I've done, because I think I've extensively been able to cover the standard with you. All the 4 steps have been done. And we have covered a lot of illustrations and all. A few questions now which are there in your illustrations or in the test your knowledge questions, you can practice them, revise the standard. Trust me, it's going to take not more than 15-20 minutes to consolidate all the things with you, and you'll be able to pretty well revise the standard. Let me see if any questions coming in. Okay, so Koshki said, so the agenda is to achieve 75% target by adding non-filling conditions as well. Yes. Clarification 1 is to be applied even if 75% test pass. Yes, you're absolutely correct. We need to apply that test even if the 75% test pass, though that could be one of the ways of considering it to be reportable. But yes, even if you pass the 75% test, the management wants to include a particular segment which was reportable last year as reportable this year. They can do that even if 75% test is passing. Absolutely correct. Right, friends. So I think this brings us to the end of the things today. Let me see if there are any questions which are coming to your mind. Otherwise, we're done for the day. And I guess I may not be having any sessions, I think, in this month with you. Probably, let's see if we meet you in the next month. And so that was a journey, I think, interesting indeed. Thank you, Koshki. Thank you. So any questions further coming to your friends? If you've got any more questions, of course, you've got the email ID of the institute, and you can send your queries out there, and I will be happy to take up your queries if there are any kind of clarifications, etc. And we will cover that as well. I think, Koshki, you mentioned about a few things on Ind AS 115. Maybe we'll add a little recorded session for those extra additional issues related to Ind AS 115 Appendix B issues. So we'll, I think, probably try to take care of that as well. Thank you, Namrata. Thank you, all of you, friends. So I think that seems to be good for the day. So thank you, all of you. Bye-bye and take care.